Hi, we have heard from so many people talking about how the Elliott wave principle is only to be applied in indexes, cannot be used on stocks. Some people say it can only be applied on this time frame or that time frame, which is probably not right. To illustrate that, let us look at a potential trade developing in the currency market. Now, we do know that the dollar index is on the verge of a significant fall. We will not go into the technicals of the dollar index as such, but let us think how we can take advantage of that analysis in our Indian markets. We do not trade the dollar index, but we do trade Euro, GBP, and the USD. So let us look at the charts for the Euro INR. This is the weekly chart of the Euro INR, and on the weekly chart you can see that there is this huge impulsive rise. Then there was a three-wave fall. Then there was a rise, a fall, and a bigger rise. And if you will see that this bigger rise was actually breaking out of this channel. Then let us focus on this price movement on the daily chart. On the daily chart, you will see that this decline after this rise is a three-wave decline, right? So if you, my subscribers, have been following me, you will know that a three-wave decline is usually a counter trend or corrective decline. Fine. So this is a classical A triangle B and C, and then there is this sharp move up and a decline, and another move up has started. So we would like to postulate that this is an ABC decline and another impulse to the upside is starting. So last week we have gone long on the euro against the rupee, and we are looking for euro to move above 81, and once that happens we would look further. Now coming to GBP INR, the British pound. Now this is the GBP INR weekly chart, and here again it is very interesting, almost a similar pattern. A large impulsive rise followed by a three-wave decline, and then another rise followed by a three-wave decline, and now another rise is starting. So same wave count, and we have again gone long on the GBP INR last week, maybe around 88.5, and we are already at 91. We have already actually broken out of this channel. You can see very nice channel, and we would be looking for this to move up in the days and weeks to come. So what would be your targets? The targets here would be a taking out of the previous high at 98.8 and ultimately going towards newer highs. So those would be long-term targets, and we would like to monitor this as we go forward. Our stop losses on our position is about 86.6, and we will obviously move the stops as the trading goes on. So these are some couple of exciting setups in the currency markets. Those of you who do not trade currencies, I would sincerely advise you to have a hard look at them for number of reasons. Number one, the leverage is very good. Number two, the liquidity is amazing. Nobody can manipulate the currency markets like they could manipulate stocks or the indexes. Here, if they want to manipulate Nifty, they do Reliance and HDFC and stuff, and they manipulate it on all Thursdays. Currency, nothing of this sort can be done. This is a huge market. And thirdly, the correlations are very good. So looking at the dollar index, probably we would want to go long on British pound and the euro. We would not like to short the dollar right now because the USD INR chart is still not very clear whether it's going up, down, or sideways. But these charts, these two charts, are really, really good. So those were a few thoughts about the currencies. I've been getting a lot of inquiries regarding Elliott Wave education, and for those of you who are interested, you can get in touch with us on the above email or phone. Thank you and have a great weekend. Bye bye.